This is Maria. She's the Director of Compliance for a large property management and development company with properties in several states, including Virginia. All of her Virginia properties have tax credits and/or tax-exempt bond financing through VHDA. These are also known as Low-Income Housing Tax Credits, or LIHTC, or housing credits. In Virginia, the Federal Housing Credit Program is administered by VHDA. It's Maria's job to review the technical guidelines for the Federal Housing Credits Program and provide guidance to her compliance monitoring staff and the on-site property management staff. She has worked in the affordable housing industry for a number of years and is knowledgeable about maintaining and managing program and regulatory requirements. She recently attended a webinar on the new minimum set-aside election called Average Income or Income Averaging. She's reviewing her notes from the webinar, and she needs to share some key takeaways with her property owners and management staff about how this will be applied in Virginia. Each state will be implementing the new minimum set-aside election in their own way, so what applies in Virginia may not apply in other states. Where should she start? What are the requirements of the original two minimum set-aside options? What information does she need to review to understand how to monitor the average income minimum set-aside? How is average income different from the other minimum set-asides? Maria knows that it is important to start by going over the requirements of the two original set-aside elections, which have been used since the tax credit program began in 1986. What is the minimum set-aside? The minimum set-aside elections are identified under Section 42G1 of the IRS Code of 1986, which defines a qualified low-income housing project. The minimum set-aside requirement is a project-based test that must be met in order to claim the tax credits allocated to the project. Once the owner makes the minimum set-aside election, the choice is irrevocable, and the corresponding income and rent restrictions apply throughout the extended use period, which is at least 30 years. The owner's minimum set-aside election establishes the minimum number of low-income units that must be provided to be a qualified low-income project and generate tax credits. The income limits apply to all low-income units used to identify income-qualified households, and the maximum rent the taxpayer may charge for all low-income rental units. The owner's minimum set-aside election for the property is defined in Line 10C of the Internal Revenue Service, or IRS, Form 8609, Part 2 for properties in her current portfolio. The 8609 Part 1 is issued by VHDA, the Housing Finance Agency, or HFA, for Virginia, and includes the amount of tax credits allocated to each building. The IRS 8609 form is also used to identify how the project is defined. Remember, the minimum set-aside requirement is a project-based test that must be met in order to claim the tax credits allocated to the project. Projects are defined in Part 2 of the IRS 8609 form on line 8B. If yes is checked, all buildings will be treated as one project. If no is checked, the units in each of the buildings will be treated as separate projects. Here is an example. For a project with 2 buildings and 16 total units, if the owner elected the 40/60 minimum set-aside and line 8B is yes, then all low-income units are required to be income and rent restricted at or below 60% AMI, and a minimum of 7 low-income units can be spread across the 2 buildings in order to be considered a qualified low-income project. However, if line 8B is no, then each 8-unit building is a separate project, and the owner must maintain at least 4 units, or 3.2 in each building, to remain a qualified low-income project, and all low-income units must be income and rent restricted at or below 60% AMI. Here is another example showing the unit mix for both set-asides, 40/60 and 20/50. All low-income units must be income and rent restricted at or below 50% AMI, and for 40/60, all low-income units must be income and rent restricted at or below 60% AMI. Be sure to view our other videos about Maria and to learn more about the average income minimum set-aside election.